This is the 1715 Treasure Coast Financial Wellness Podcast, where we'll keep you up to speed with the latest market news and conditions every week. Now, here's your host, Thomas Davies.
Welcome to another episode of the 1715 Treasure Coast Financial Wellness Podcast. My name is Thomas Davies. I am a wealth advisor here in Stuart, Florida. And welcome, everyone. I'm glad you found us here on YouTube or you're listening in on the podcast. We've got a great show for you today and cannot wait to get it started. We've got a special guest today, Jonathan White with Assisting Hands, which is in-home healthcare provider. And we are excited to have him talking all things about in-home healthcare and assisting when you need it. So that is going to be a little later on in the show. And a couple news items that fallen this week. Home sales have fallen to a 10-year low. Imagine that. With mortgage rates hitting over 7%, it's not a surprise. The Fed did come out and say that they were going to correct home prices. Well, we're starting to see that here in Florida. Maybe not so much. It seems like home sales are still pretty regular and the prices are holding up for the most part. But from what I heard today, that homes are staying a little longer on the market than they have in the past. And certainly who wants to jump from a 2 or 3% mortgage to a 7% plus mortgage? Markets again have been volatile this week. We're seeing still a lot of volatility. It looks like as of today, unless something happens big tomorrow on Friday or today, that we'll close more positive for the week. That's a great note. And so a little tidbit, a little news this morning I thought was kind of funny. If you went out to McDonald's and got one of those new adult Happy Meals and got a toy, well, you better hold on to the toy because you could sell it for thousands of bucks on eBay. That's right. You heard it right. The toys that they're giving out for adult Happy Meals are going for big bucks on eBay. Just read that this morning. I thought that was kind of funny. Tesla came out with their earnings and missed on revenue, so the stock's taking a little bit of a hit. I am a big Tesla fan. I think Elon Musk is certainly bright and for the future. So is that stock of value? Maybe. It's certainly trading a little lower, and we'll see where things end up. So the next question is, should you sell the recent rally? What is your time horizon? We want to make sure that your time horizon is, in line with your portfolio. And if you have a short time horizon, then you may want to sell this rally because you never know what tomorrow may bring. I can give you a recent story. I had a client call me, and they had a time horizon of about 30 to 45 days, which is almost tomorrow. And I said, well, listen, we don't want to wait 30 or 40 days to find out what the market's going to do. Being up over 5% in the last week and a half, you want to take advantage of it, and because we just don't know what tomorrow may bring, and that could be a 10% or more to the downside. And certainly what you have in the moment. And so, that time horizon really dictates how you should invest in your portfolios. And that will also dictate how much risk you want to take inside that portfolio. Because if you have a short time horizon, maybe this market has not gone the way that you foresee it has gone this year. It may be time to take some advantages of some of the rally that we've had in the market. It's always a great time when markets are down to look inside your portfolio and take an in-depth look and see what's going on. Certainly there are going to be things inside a portfolio that may just not rebound the way that you think that they should. And that's why really you want to do some of the homework. A lot of the opinions may have changed on those particular companies. We are certainly now in a different atmosphere than we were last year when it comes to doing business. There is a cost for doing business now. Interest rates have risen, so the cost to borrow money has gone up, and there are a lot of businesses that were built on doing business with free money. So hopefully their balance sheets and their margins can equate for now paying upwards of 3, 4, 5, or as just mentioned, mortgages over 7%. So it's always a great time to look. With the bonus of interest rates going up, the 2-year Treasury over 4%, almost 5% on your money. It doesn't get much safer than U.S. Treasuries, and at almost 5%. For those of you that are in the fixed income lifestyles, this may be an alternative to look at to get really stable income on your portfolios. And there are many other alternatives as interest rates have risen. The insurance companies and annuity companies have risen their rates. So you may want to take a look at some of those other alternatives in the fixed income market. I can tell you that my email inbox is filling up every day with fixed income wholesalers basically saying, hey, we've got this. Well, why is that? Because interest rates have risen. They've been, in the bottom of the barrel. And now these companies are able to have somewhat of an offering for the fixed income market. So interest rates going up is not a terrible thing, especially for those that are on a fixed income budget and, really are worried and want to maintain the principal inside their portfolios. So those are some of the things that you might want to take a look at. One of the things I did want to talk about today is life insurance and long-term care. I know, it's boring. But for those of you that are in your 30s and 40s, it is important. For those of you that have families, maybe you do own a home. You want to protect it. And the way you do that, you protect your family, is with life insurance. I've always told people that life insurance is not for you. It is for your family and loved ones. You're dead. It's not for you. You buy life insurance for yourself to protect those that you love. It's a way to protect your house. You say, well, gee, how do you do that? Well, let's just say your mortgage is at $300,000, $400,000. Well, how much life insurance do you need? You want to take a $300,000, $400,000 policy to cover the cost of your home. That way your loved ones will have a place to live. The only thing they're going to have to worry about is paying taxes every year and whatever utilities there are on the property. To get a $500,000 or less life insurance policy under the age of 40 is really inexpensive, and it's really a cheap way to protect your loved ones. So that's something you want to make sure that you look into, is getting some type of life insurance policy to protect your loved ones. And that can be a term policy, that can be a whole life policy. And for those of you going, what's a term policy? What's a whole life policy? Well, the easy way to think about it is a term policy is like your auto insurance. If you don't use it, you just paid money out and you don't use it. You never got hit by something like a truck or a car or something. Whatever it is, the life insurance, term insurance is just that. You pay for a term, whether it be 10 years, 20 years. It's going to cost less than a whole life policy. A whole life policy is more like a savings account where you put money in and it can grow in value, but the premiums generally are a little higher, so it's going to cost you more. Some advisors will tell you to buy a term policy and take the extra savings and put that into the market. That is certainly one strategy. Other advisors will tell you to put the money in a whole life policy and invest through whole life in an insurance policy. I am more of the advocate that to buy term policy and then take that money and invest it in the market. I think you can do a lot better in the market than you can investing through insurance. I always like to say that, remember, insurance companies are there to make money, not to make you money. And there is a cost with the word insurance. Insurance is not free. So those are a couple things, to think about is protecting your loved ones with life insurance. Once again, if you have a mortgage, you want to protect your home, you take out a policy, whatever your mortgage is. If it's $300,000, $400,000, $500,000 mortgage, you take a $300,000, $400,000, $500,000 life insurance policy. And that way you have protected your loved ones with a place to live. So without further ado, I'm going to bring on our guest here, Mr. Jonathan White. I thank him for being on the show, and we're going to learn a little bit about in-home care and why it is important to get a long-term care policy inside either life insurance or an annuity, because the costs keep going up. And long-term care is one of those things where if you need it, it is going to cost you. But if you don't need it and you can plan for tomorrow, it's a lot less expensive to buy it today when you don't need it. Whereas in your 60s or 70s, when you need to buy a policy, and for those of you that are in your 30s and 40s, it may not be there in your 60s and 70s. Because the costs keep going up, and up. So without further ado, I'd like to bring on our guest, Jonathan White. Well, welcome, Jonathan White. Thank you for being on the podcast today. Jonathan is with Assisting Hands in Fort Lauderdale, Florida, and we're going to talk about in-home healthcare today. And Jonathan, thanks for being on the show, and really appreciate it. And welcome.
Thanks, Thomas. Really great to be here and looking forward to the conversation.
Yeah, it's such a large topic, in-home health care and this, getting assistance when you get older. And, we're still fairly young here, and it's not something that, you think about until you're there. It's kind of like insurance. You don't necessarily want it until you need it. And that's not always the best time to think about it. It's really the best time to think about it is as you're starting to look into retirement, as you get into retirement. And it's always, a little less expensive to buy insurance now when you don't need it, more as when you do need it, right?
Yeah, absolutely. And I think you're spot on, right? The in-home care is not a topic anybody really ever thinks about until it touches their lives, either with a loved one or for themselves. And the planning for the cost is much better to do I'll take our younger age. I'll take that as a positive there, for the timing of it versus when you're actually needing the care, very much like insurance.
Yeah. And, as yourself, having talked with you on many occasions, and my listeners, I advocate planning for the future, and how important it is, and getting your planning right. And, it's just so important to get things, pre-planned, so to speak, and it's sometimes, it's really the most cost-effective way. And you sacrifice a little bit now, but man, the gains you make later are just massive. So what's new in home health care, and maybe we can, what's going on in the world. It seems to be ever changing. Insurance is changing every day, and we'll talk about that a little bit with some of the Medicare coverages, and but what's kind of the hot button issue right now in the world of in the world of home care?
Sure. So we have a couple of major things that are occurring in the field. So one, we have an aging boomer population, right? That's starting to get to the point where they're needing more of this care. And so that's creating a lot more demand in the market. And then obviously meeting that demand with available people to take care of those folks as they age is a bit of a challenge in the industry, right? So that's a focus across the industry right now. Another one is when we look at the insurance side of it, the long-term care insurance, which is obviously the best form of pre-planning you can do for that, for the costs that come from it. The plans and the options available are just continuing to become more expensive, and the benefits are continuing to decrease. So, the longer you wait, the more you're going to pay based on the age of yourself, but also the less options and benefits you're likely to be able to receive from it. And then one other factor is the combined life long-term care insurance policies. That's becoming a much more popular thing, right? Because then you're betting on not only, hey, if I don't need the long-term care, at least I'm not just paying for a policy I never use, right? Because it is also a life insurance policy and it'll benefit somebody as well. So I think those three are probably the biggest topics as we focus on things around the industry.
Yeah, and I know, when I started in 1996, there was probably about 20 carriers that would write long-term care, and I think we're down to about 4. The coverages have shrunk and just keep continually to shrink as healthcare costs rise. And an interesting statistic that 43% of the population now, which is almost half, is the millennial generation. So that baby boomer generation is ever so shrinking. And that such a large generation, of course, is now getting into that retirement age, of their 60s and 70s. And unfortunately, everybody's not built the same way, and everybody's as healthy as one another. So that's certainly those costs continue to rise. One of the questions I get a lot, and as we start to plan is, how much, what's the cost of these things? And I know there's a bunch of different options that a person has, whether it be, inside an assisted living facility, inside their home. And we can just kind of go over some of the general costs for care. And, we'll look at someone, let's say, that's just in retirement. Maybe they had a health issue and they need that in-home care for a certain amount of time. And then we can kind of go through the stages of life, right? So you've got that person that just retired. Unfortunately, the body starts to fail as we get older. And then as we get into our 70s, 80s, and 90s, obviously that care is going to kind of, be different. And maybe we can talk about the different stages and the different costs in those different stages of life.
Sure. Yeah. So really within home care, there's two major kinds, right? So there's medical in-home care, and then there's non-medical in-home care. And the medical is going to be driven predominantly, around that's wound care, physical therapy, things like that. And that's going to be driven from a specific event or injury, right? The thing we're going to focus on for the cost is the non-medical. And that's the stuff you were just talking about, right? As we start to age and more problems crop up. And this is the things where we need ongoing help with our lives, right? So for non-medical, when you're looking at the cost, is predominantly driven by the number of hours per visit, right? So if you have somebody come once a day or twice a day, once a day would be 1 visit, twice a day would be 2 visits, right? So it's not per day, it's not per week, it's really per each time somebody comes out. And those folks are coming out and they're doing things like, helping out with, bathing, transferring if you need it, meal preparation, light housekeeping, things like linens, laundry, cleaning up kitchens, bathrooms, all those sort of things that just sort of enable you to continue living your life, whether that's at home or in a facility, right? So as you mentioned, you can get extra care if you're in an independent living facility or an assisted living facility. And those facilities aren't providing 24-hour care, right? So if you need additional help, especially if you want to stay in an independent living facility, you need to be independent, and therefore you may need to have an aide providing that help, right? But it's going to be, again, driven by the number of hours and time they're spending with you, right? So the prices really are ranging from around like $35-$40 an hour from really short visits, the 2 hours, 1 hour visits, down to about $20-$21 for a 12 per hour for a 12-hour shift, right? And that's obviously in the Broward County area. It's going to vary wildly based on where you are, right? So South Florida is fairly consistent on pricing. You get up into Orlando, Jacksonville, that's going to be very different. And when you get up into the Northeast and Midwest, California, all of those places are going to be very, very different pricing, or Southwest even as well, in Florida. So, but if you're doing that math and you're thinking, hey, I need significant care, right? So you're looking at, if you actually just start with the shorter, right? If you're doing $70 a day for, 2-hour visits, 7 days a week, right? That's still going to be a decent amount of money per week. But once you start getting up into the 24-hour care, as things progress, where you really need a lot more assistance and you need somebody helping you out with all the activities, I mean, you're talking significant amount of money per week. And as you mentioned, when you start getting into the funding for these components of it, if you haven't done the pre-planning, right, you're looking at a few government programs that can help, or you're doing it out of pocket. So the long-term care insurance, as we talked about, that's going to be your best bet, but you need to think about what are those benefits going to look like when you need it, right? And that's going to really be from, unless you have a chronic illness like ALS or MS, you're probably looking in your late 70s, early 80s is when a lot of folks start, all the way through, we have a few clients that are north of 100. So figuring that out.
Yeah. And so, most of our podcast listeners are probably going to be in that 30 to 40-year-old range. Maybe, we got some older people there in the 50s and 60s. Sure. So, all the listeners there and YouTube watchers, that are in your 30s and 40s, you're going to, listen up, because, it's going to save you a lot of money in the future. And that's great information. I know, cost is always an issue, and that's probably, no matter whom I speak with, the number one question is, do I have enough money to retire? And, it's all comes down to lifestyle, right? And health, and health is really the bigger driver than lifestyle. And I try to drive that home with my clients, is that, you can have that ideal lifestyle, but if you don't have your health, you have nothing. And I always kind of look at Steve Jobs, right? Had all the money in the world, and unfortunately he got sick and passed away. And all the money in the world couldn't save him. So, it's a big driver for sure, and cost. And, we talked a little bit, about long-term care, insurance policies. What are some of the payment options, for in-home healthcare? I know Medicare obviously is one of them. Insurance being the other, long-term care, maybe inside a life insurance policy. I know some annuities will have those riders inside them also, where they can use some of the money, towards those, in care costs. So what are some of the payment options? Are there any other ones that maybe we didn't cover? Or?
Sure. So as you mentioned, right, long-term care insurance, that's what it's designed for. There's some that are hybrid life long-term care policies. Straight out-of-pocket private pay is obviously the fallback option. And then there's this sort of three main government entities that really help. And there are some other charity programs and some small one-offs, depending on your community, that can help as well. But you mentioned Medicare, and Medicare is really designed for the medical services and the acute challenges, right? So Medicare will occasionally cover some non-medical in-home care, and that's going to be, if you've had a hip replacement or something significant like that. Some Medicare will sometimes approve a week or two. Right, but it's going to be very limited, and it's not going to be able to support your long-term ongoing lifestyle. Right, it's going to be around a specific event for it, and it will be limited. And Medicare, even for medical services, will have a 30 to 90 days sort of window, and then you've got to either get reapproved or find another option for it. Right, that's just the way Medicare is designed for those components of it. Medicaid will absolutely cover. Now, there are challenges around waiting lists to get approved for the long-term care in Florida, in Broward, right? And Medicaid's by county sort of areas. The other component with Medicaid is, right, we've got to qualify with both the assets and the income thresholds for Medicaid. Now, there are some solutions around trusts and components like that can help you get ready and qualify for that. But there is a look-back period. on it, right? So that's something you should be planning ahead of when you need it.
Yeah, that's going to be next week's show. We're going to have an estate planning attorney, and we're going to talk about Medicaid and and some of the things that people can do that maybe have some assets and want to protect those assets, but still qualify for that care. So I'm glad you brought that up, and I'm certainly going to talk about that in the future.
Perfect. Yeah, and that is core. And as you mentioned, the age of a lot of the folks listening to this, they should be thinking about that now. The other major entity is the VA, right? So Veteran Affairs has a couple of programs, right? There's one for disabled veterans that's obviously going to support those components, and there's you have to go through the VA hospital and get approved, and there's either the Miami or the Palm Beach centers will do that approval and component of it, and there's significant benefits there, and they pay well, so you can, you're going to get aides that are more loyal and likely to stay, right? And that's a big component of it. And then there's one more program from the VA for aid and attendance, and that's for all veterans and their spouses. And there's a certain amount of money per month that they'll provide, and there are thresholds to meet the qualification for that. Financial threshold similar to the Medicaid program, and similar to the Medicaid program, having the protection program that the state planner can talk about set up for the VA aid and attendance program will be there as well, right? And they provide it's if it's a veteran for themselves, if it's a veteran for their spouse, or if it's two veterans for themselves both together, there's different thresholds of the dollars of what they provide for that. So those are the main programs outside of long-term care insurance and private pay. And one thing I will mention, right? We've had some clients who are very wealthy and have a fortune, but right, if your health isn't there, how much money you have doesn't change anything, right? Your lifestyles can be limited and more dictated by that than anything else, unfortunately.
Yes. So you brought up a couple of great points, and I kind of like to expand a little bit. Certainly we want to make sure our veterans are taken care of, and I think there's a lot of veteran spouses out there that don't realize their spousal benefits for the if they're married to a veteran, and so it's really kind of a subject for another day, but that's certainly something that we want to make sure is that our veterans and veteran spouses are covered, and those benefits are certainly taken care of. And
one thing I would just add,
you mentioned about I'm sorry, go ahead.
Yeah, the VA aid and attendance program, I just wanted to make sure I mentioned, there are a couple of requirements around the service as well. So the veteran has to have served at least one day during an active wartime. So, Iraq, Vietnam, Korea, there's a few of those and some stipulations around it, but absolutely agree with you. Too many folks don't realize that there are benefits that they're eligible for as the spouse or as the veteran themselves.
Yeah, it's actually one of my most downloaded blog posts is about veteran benefits. It's very popular. People are always searching for information. One of the things you brought up is that quality of care and service. And being in South Florida and having dealt with retirees and hearing all different types of retirement plans for people, one of them certainly is, well, when I get old, I'm just going to hire somebody and have them live in my home, and have Maria come in or whomever it may be, and live in the spare bedroom. It's certainly it can be an option, but it's hard to find, and hard to find trust, and we talk about certifications, and and maybe you can tell me a little bit about that process, because just hiring somebody that was maybe that cleaned the house maybe is not the best option to take care of you when you're not healthy or recovering.
Yeah, no, it's a great point. And there is a benefit to hiring a company to help out with it. There's a couple of benefits, right? So there's two kinds of companies that help out with this, right? The one is a registry, and the other is an agency. And the difference between them, an agency, the caregivers are employees, right? So for me, we're an agency. And the reason for that, the big benefit there is going to be around risk, right? And it's the same with hiring a private caregiver in your home. If you hire a private caregiver, you're taking on all the risk. So if something happens to that caregiver in your house, you're not going to have any insurance coverage besides your own homeowners and your own assets for anything that happens to them. And that's going to be true for a private caregiver or for a registry, right? So an agency covers those components of it. If they do something wrong and damage stuff in your house, for a private, there's no coverage. For a registry, they are required to at least cover liability insurance. The aid themselves covers it, the registry doesn't. For an agency, obviously, we cover the liability insurance for anything, those components, right? So that's one big aspect that people need to think about. Now, you're probably going to pay a little less for private aid, slightly more for a registry, and obviously slightly more for an agency because of that risk, right? You're transferring who has the risk. The other component of it, registries and agencies are required to do background checks, level 2 full background check on our aides, and we cannot employ aides that have a history of financial fraud, any crimes against the elderly, any of those components that show up cannot be employed. And then I know for ourselves, if our aides are going to be driving the clients around, the patients around, we're doing driving license checks on it. We're doing a lot of those components. And then as an agency, we're able to do more training and components because we're not running afoul of the 1099 employment contract components. So it's really a focus on like how much risk are you willing to take off versus cost offset, right? And it's just something to think about for it. Now, the pricing change isn't significant. You're talking $1 an hour, maybe $3 an hour at most, right? And you got to think about the risk you're willing to take on there. And then the other component is if you hire private and they don't show up, who do you call, right? Yeah. Like, what's your outcome?
Who's your supervisor?
Yeah, that's and where do you go to find a replacement, right? Having that as a solution, and that's a pretty critical thing because everybody's a person. That caregiver is a person. They have their own life. They might have family stuff going on, or if they need a vacation, how do you backfill for them, right? So a lot of those components are things folks need to think about when you're looking at private versus a company like a registry or an agency.
And a couple things I know you've brought up in the past, and you brought up a good point. I think when people talk about aids or in-home care, driving is maybe not one of them. Maybe driving to the grocery store, driving to pick up the prescriptions, not just making the bed and doing things like that for in-home care. So I know that whole driving aspect, and I know you brought up one interesting issue about the medicine. And putting the medicine in the pill boxes. I found that fascinating. It's some of the laws that are regarding around that. And I thought that might be interesting to, our listeners and followers here. Tell me about that. What, they can take the medicine out, but they can't put it in the pill boxes or something like, you can pick up their prescriptions, but you can't separate it for them. What exactly is that all about?
Sure. So the ACA is the regulatory body in Florida for home care and really medical services. The Agency for Healthcare Administration, right? And ACA has specific regulations around the medical and the non-medical in-home care, right? And who's allowed to do what activities for it. And now the medication one you bring up is fascinating because that's actually an emerging, changing component of it. So there's going to be more permissions for the non-medical, the certified nursing assistant, home health aide certification level to help out with that medication. But the exactly what that's going to look like and what the training required by ACA is still in flux and in design. So stay close to this as it continues to evolve. But currently, right now, CNAs and HHAs They can help with the medication by taking it out of the pill bottle and providing it to the client, and then helping the client with taking that medication. They cannot take it out of a pill bottle and put it into a weekly planner. So they can direct from the pill bottle, read the directions, take the medication out and provide it to the client, and then help the client with taking it. But they cannot take it from the pill bottle and then put it into a weekly planner for the client to help themselves. You have to be an LPN or an RN for that at this time. There's other things like cutting fingernails and toenails. You have to be an LPN or an RN to cut the fingernails or toenails at this time. For it.
But an aide could take them to a nail salon and they can get it done for them.
Yeah. And I mean, Thomas, you could cut your family's fingernails. No requirement there. It's just for the aides that there's restrictions around it, right? So now, if you hire a private caregiver, because they're not really being treated as an aide, they can do those sort of components of it. It's just one of those things with the companies comes more regulation, and that's a good thing in a lot of ways, but because of the required background checks and those components make sure that everybody in Florida is doing those things, which is good.
And Jonathan, if someone wanted to reach out to you, what's a good phone number for you? And I'll have you repeat it a couple times.
Not a problem. So our main office line is going to be the best way, and it's because it's one we always have monitored with me and my team here, which obviously means if you call us at 3 a.m. we're probably not awake, but we will respond as soon as we can for it. But it's 754-900-5102, and I'll repeat it as you said, 754-900-5102. And you can just ask for me, Jonathan, and say, hey, I got some questions. You were bringing up some stuff I'd love to follow up on. And I'm always happy to help anybody, even if we're not taking care of you. This is a confusing journey to go on when you haven't been around it, and having somebody that's willing to just give you the answers and tell you what you need to know is really helpful.
Absolutely. And what's your website, Jonathan? So if we want to, and I'm going to have all this in the description in the bottom here, on our YouTube channel. We'll have all Jonathan's information, so you guys can look him up and don't call him at 3 o'clock in the morning unless you need to, and he'll call you first thing about 7 a.m. So, but just for our listeners, maybe that are listening to the podcast, what's the website that someone can look you up there?
Yeah, I would also just add my email address if anybody wants to do that. I know a lot of us are more on the digital communication, and that phone number you can text. But my email is jwhite@assistinghands.com, and then the website is www.assistinghands.com/Fort Lauderdale.
Perfect. Well, Jonathan, I always like to close out with, is there anything that you can think of that maybe we didn't cover, that, that one surprise that someone may get, because a lot of times, unfortunately, more so than not, people are looking to you when they need you, not necessarily planning to the future. And we're here about planning to the future, and making sure that we have the right plans in place. So when the time does come that, that out-of-pocket expense is minimized, whether it be through that, long-term care insurance, or some other type of insurances that we can get now at a lower cost for all our listeners in our 30s and 40s out there. Now's the time to plan. But what's the one surprise that probably you see, or the oh my moment in your industry that you get? And then we'll kind of close it out with that.
Sure. So I think the biggest one would be the impact of a fall, right? So a lot of folks, as they start getting a little less stable, or their parents are getting a little less stable, they said, oh, it's a risk, but it's okay, we'll wait. A fall as we age can be significant. The impact can go from, hey, we're having a wonderful conversation about everything, to my loved one needs 24-hour care, right? It can be that drastic from it. So one of the big things I'll say is folks don't realize is that the impact that can have. So preventing the fall is really what you want to focus on, right? So if you look at something and you say, okay, I'm starting to see some risk signs for myself or a loved one, the prevention is so much better. Have that aid come out and help out before anything like that happens is so critical. And I know you asked for one, but there's one more I want to bring up.
Sure.
And it's going to be the resistance your loved one's going to have to admitting they need help, to being able to accept it, right? It becomes very hard for folks to admit this is one more area that they need help and they're having to give up some independence. And being able to approach that conversation with this isn't giving up independence. We're bringing somebody that gets to be a support and friend and somebody that you can rely on, and that you're going to be able to help you, right? Not somebody there to look after you, but somebody that you get to tell them what you need and drive the things and the care. And approaching it from that angle becomes super critical. So I know you asked for one, but I'm going to give you two on that for it. So I hope that's all right.
Yeah, no, I appreciate it. And, usually the toughest conversations are the best conversations to have, and it usually starts with pulling the car, not letting them drive, and it just goes further on from there. So, Jonathan, I really appreciate you taking time out of your day today. Jonathan White with Assisting Hands in Fort Lauderdale. I sincerely appreciate it. And certainly for those of you that, are thinking about any type of in-home care or any type of care, reach out to him, send him an email, give him a call, and he's going to be there for you to answer your questions. We did talk a little bit about funding, some of the costs. But he is going to be your main source to reach out to and find out everything. Jonathan, thanks again for being on the show. I appreciate it. And we'll certainly have you back if you'll have us back.
No, I appreciate it. Really enjoyed it, Thomas, and happy to do it whenever you need.
Perfect. Thanks again, and I appreciate it.
All right. Take care.
All right. Wow, what great information that was from Jonathan. And thanks again for being on the show. Invaluable information as always. And please feel free to reach out to him. Once again, his information is going to be in the description. And give him a call and reach out for anything regards to in-home care. He's going to answer your questions on costs, maybe what coverages you have. We did have Roseanne Birch on our show last week talking all things Medicare. So if you're on Medicare and you have some questions, remember you can reach out to Roseanne. And once again, just great information. And thanks again, Jonathan, for being on the show. And that's going to do it for this week on the 1715 Treasure Coast Financial Wellness Podcast. We thank you for listening. Don't forget to like and subscribe. Once again, my name is Thomas Davies. I'm the Wealth Advisor here in Stuart, Florida, and we are out. See ya.
Thank you for listening to the 1715 Treasure Coast Financial Wellness Podcast. If you enjoyed this episode, share it with a friend who might like it. And please rate, comment, and subscribe. If you'd like to contact us, find more information, or if you'd like to keep up with us on Facebook, Instagram, Twitter, or LinkedIn, check out our website at www.tdwealth.net. Have a great day, and we'll talk to you next week.